Hi everybody, welcome to Coffee Break Accounting with me, Becky Brooksbank. As always, if you haven't grabbed a cup of tea or coffee yet, head over, put this on pause, head to your kettle, put the kettle on, grab a cuppa and come back so you can settle in for our 10 to 15 minutes of jargon-free accountancy tips so that you can better understand your business numbers. So today we're going to have a look at Series 1, Episode 5, which is about overheads. So if you've been following the series from the start, you'll know that everything in Series 1 that we're doing is surrounding the profit and loss account. So we have looked at sales, direct costs, gross profit, and last week we took a bit of a detour away from the profit and loss account to look at pricing. But as I'm sure all of you who have had a look at the pricing episode will realise is it was an absolutely essential detour. So what's the point of understanding our gross profit if we don't know how to fix a pricing problem that it's showing to us? Okay, so hopefully you've all gone away, had a go at the takeaway task for last week, which was to look at your service or a product and see how your pricing's gone, and looked at the demand and also competitor pricing to see if it gives you any insights. So today we're going to keep going down the profit and loss account, and we're going to look at the final segment that you get on the profit and loss account, which is overheads, otherwise known as expenses, general expenses, admin expenses, many different terms for them. So I will use all the different terms throughout this episode just to get you used to them as well. So how do we differentiate between direct costs that we saw at the top of the profit and loss and overheads that we see at the bottom? Now, always think of it this way, okay? Overheads are expenses that don't relate to the sales that you have. If your business was closed for the day, what overheads would you still incur? Okay, so you're not going out to a client. Let's imagine John Tapp is taking half a day off to catch up on Coffee Break Accounting series so far. Okay, he's going to sit there, he's going to bring his cup of tea and sit and watch all the episodes back to back. He hasn't got a customer. What costs will his business still incur while he's sat spending the time watching Coffee Break Accounting and learning about his business? Okay, those are his overheads. And what you'll find about overheads is they're more non-industry specific. Okay, so they're more common across all industries. You'll find very similar ones in each of them. They might have slightly different names, but the actual essence of what the overheads are will be one of the same. Okay, so let's have a think about John and his business. And I'm going to pause for a second while you think of some things, some overheads he might incur when he's not seeing customers. Okay, what bills will he still receive? What invoices will he have if he's sat there taking a bit of time to do some business strategy? Okay, I'll give you a pause for a second while you have a think and jot some down. Okay, so let's have a look. John's done this exact exercise. If we open up here, that's what his profit and loss account looked like when we left him. And he's now extending it. I'm going to make it a little bit bigger so you can read it better. He's going to extend it here by looking at his overheads. Okay, so John has decided his business, he has a telephone bill. He incurs travel costs, marketing and advertising, web hosting, accountancy fees, professional fees, insurance, and subscriptions. So let's put it in the context of John's business. So yeah, he has a mobile phone. That's an easy one to understand. Travel costs. Now, travel costs could go either in direct costs or they can go in overheads, okay? If it's a travel cost that's related to going out and doing servicing a client, then you could include it in direct costs. There's no harm in doing that, okay? But commonly, in many, many businesses, all travel costs are just kept as an overhead to the business. Okay, so John's put his in overheads. Marketing and advertising, we all spend some money on that. Our marketing budgets, if you don't then you probably would implement for the next financial year. Web hosting, most people have got a website nowadays. It costs to run it. There's some fees involved. Put them all to web hosting. Accountancy fees, they're always there. Whether it's for your Xero software you're using or for an accountant to help you, end of year, tax returns, whatever it might be, there's some element of accountancy fees. Professional fees tend to cover everything out. So whether you use a solicitor to draft up a contract, whether you have help from a HR person, something else came into my mind and it's disappeared again. But any professional body that you use, the professional fees can go in there. Okay. Insurance, 100% important for every business. You should have insurance for what you're doing. If you don't, go and speak to an insurance broker. And then subscriptions. So John might subscribe to Plumbing Weekly or whatever the plumbing equivalents are out there. I have subscriptions to my ICAW membership for being an accountant and also CIPD for being a HR associate. So any subscriptions that you subscribe to annually or monthly, you can put in there, okay? So John has analysed his overheads and he's kept his relatively short and succinct, okay? But there are some other overheads that you've probably got on your list that John doesn't incur in his business. So we have rent. If you've got an office space, a warehouse, whatever it might be, you'll have some rent. Rates, heating, light and power, internet, bank charges, food and subsistence, entertaining clients. These are all examples of overheads your business might have. Okay, now they will very much depend on the type of business you have. Some businesses have, if you're a sole trader, likelihood you have got less overheads than more established businesses with employees and everything else. Okay, so another example of overheads could be staff wages that aren't direct costs. So if you have admin staff or you have a receptionist or you have a virtual PA or whatever it might be, all those overheads, all those costs would fall into overheads. Okay, and what you find about overheads is often they are regularly billed. You'll get a monthly bill in for them. They're relatively static costs to the business, and over a year, unless you're restructuring or you're growing your business and you're adding bits to it, your overheads will stay relatively static. So they are also referred to as fixed costs for your business. Okay. So when you think of the direct costs at the top, they go up and down quite a lot depending on the amount of sales you have. They're called variable costs. Overheads are fixed costs because they're relatively static, and you will incur them regardless of whether you have a sale at the top line or not. Okay. So they're relatively easy to predict, and we'll look at budgeting later on in another series, but it's where you always start. So if you want to get your head into running a budget, start with the overheads first, because generally you can look at last year and plug in similar numbers with a bit of an increase for any changes in contracts and increase in insurance values and things like that. Okay. Now, you'll note here that when I'm talking about expenses, they're expenses that you'll incur as a business and that you'll put through your books. Now, in theory, you could put anything through your business books, okay? In theory. So, for example, if you decide that you're going out for lunch and you invite your mum along, then what people will try and do is say, oh, well, I've paid on my business card, I'll put that through my books, okay? Now, we'll come and look at this more in a later series as well. But one thing to remember is that might be fine from your perspective, but from when you're doing your tax return and looking at it from the taxman's perspective, it won't be fine. Okay? So when your accountant or yourself come to look at doing your tax returns, then they will look at using a rule called wholly, exclusively, and necessary. If your costs are not wholly, necessary, and exclusively for business, then they're not allowable for tax purposes, and they'll be added back. Okay, so I always say, okay, don't be tempted to put non-business expenses through your profit and loss. Don't be complacent by it and say, oh, I'll do it this once, it's fine. Okay, going back to the thing with mum, oh, it's fine, I'll take my mum out for lunch, but I'll put it through and as a client meal, so it'll go down to entertaining. Okay, or you decided to get your best friend a little gift on the way over to her house on a Friday evening, you put it through, well, that was for an employee's birthday next week. Okay, now the reason being is, one, it doesn't stack up for the tax man, but two, you want to show really a true profit for your business. Okay, you want to show a true reflection of what your business is actually doing. If you start putting through costs that aren't quite related to business, you're driving your profits down, and actually that'll make you really disheartened when you start looking at your profits and saying, God, I've got no profits. Where they've gone, and you'll forget, oh, actually, yeah, okay, I'll add back the fact I treated my mum and I bought a gift for my best friend. So make sure that what you're doing really does give you a true reflection of how your business is doing. Okay, because any little trick you try and do, slide in there, it just isn't worth it, because it just doesn't give you a true reflection of your business. Okay, so I get asked quite a lot as well, is how many cost lines can I have? The answer is you can have as many overhead cost lines as you can. So for example, John could have split down marketing. He could have split down into separate advertising. His professional fees, he could have put his legal fees as solicitor's fees. Then he could put down his other professional fees as separate headings. That's fine. But the one thing I would say is, don't overcomplicate things. Okay? If it's telephone, you could have telephone and internet. You know, telephone, broadband, and internet costs and accessories. So if you buy a new cable because you've lost yours for your telephone, put it all through to one cost. Make it easy so that you can understand it, because ultimately that's all the overhead cost lines are there, is so that you can read your profit and loss account really easily when you review it and know how much you've spent on each thing. Okay, but don't, if you have 100 cost lines and all you've done is put one invoice cost into it in a year, it's probably not going to give you much benefit. Okay, so for me, having a cost line that says utilities and you include water, gas and electric, and even rates, anything like that, one cost line to me is fine. But if you wanted to, and it gives you more depth of knowledge, you could split out gas, electric, water, all as separate cost lines. And it's a personal thing, and it also goes back to how much information do you want to get out of things. Okay, so that is generally all there is to say about overheads, but I wanted to finish with a top tip for today before I give you a takeaway task. If you are using a piece of accounting software, okay, like Xero that I love to use, my always tip is set up your suppliers so that every time an invoice comes in, Xero or QuickBooks or whatever it is, recognises the cost line that you want to allocate it to. So there is no reason why every month when your Vodafone bill comes through, you don't set up that supplier, Vodafone, to link directly to your telephone. Okay, spend the time doing it, because it will just save you making mistakes when it comes to coding it through, and it also just make life so much easier. So Becky's little top tip for today: if you are using an accounting software, spend a bit of time going through your suppliers and setting up the automatic cost allocation to them, because honestly, it just makes life so much easier. Okay. So my takeaway task for you today is for you to go ahead and have a look at your costs. Check that you have correctly defined your direct costs and put those up into your cost of sales, and that everything that's down the bottom are your overheads. So they're the costs that you will have as a business if you aren't seeing a customer on that day. Okay, so have a look at what your overheads are and also at what you're calling them. Is the description right? Do I understand what it is that I'm putting in this cost line? Do I have too many? Or do I have not quite enough? Or am I just happy with it? Okay, that's my takeaway task today. Go in and have a look and see if you can pull together your overheads and just look at your descriptions and everything. So thank you once again for joining me for Series 1, Episode 5 of Coffee Break Accounting Overheads. Tune in next week for the next Episode 6, when we'll be continuing down our P&L to look at net profits. So that's next week's episode on net profits. Have a good week and see you next week. Becky.